Hello everyone and welcome back. In today's video we will be discussing the importance of setting up rules for yourself to follow, and I will be going over the 5 rules that I give to myself. If you find value in this video, please like and subscribe, and with that, let's talk about setting rules for yourself. Setting up rules for yourself can save you money and help you with getting consistent gains. A lot of times when I don't follow my own rules, I lose money, so I highly recommend you create rules for yourself to follow when trading so you get consistent gains over time. Number 1, I don't chase a stock or cryptocurrency. If a stock has already run up, it's a risk to buy in because we may be buying at the top of the trend only to see a reversal soon after. We just don't know when the trend will end. I have made this mistake in the past and it has really hurt me. This is especially true for penny stocks, where we see wild increases in price only for it to go down a short time afterwards. Another term for this would be Fomo, and I try to avoid this at all costs. There are exceptions to this rule, however. When we see a pullback and there is support on the SMA line and then it continues its upwards trajectory is when I usually buy in. This is also called a retracement. A retracement refers to the temporary reversal of an overreaching trend in a stock price. Distinct from a reversal, retracements are short-term periods of movement against a trend, followed by a return to the previous trend. Here are examples of some retracement right here on Ethereum back in July. Of course, we don't know how many pullbacks or retracements there will be before a true downtrend actually occurs, so be aware of that. The second rule I follow is always having a day trade available in case of an emergency. This pertains to those who have under $25,000 in their account. They shouldn't be used often, but sometimes a setup looks good and bad news is released that hurts the market, or some sort of negative catalyst occurs or unavoidable fake out. So always try to use these during an emergency and use them as an eject seat. The third rule I follow is I do not hold through earnings. I have been burned really hard on this. I held Netflix through their recent earnings report, and that was a significant mistake. Lost a significant amount of money. I've seen that even if a company beats earnings, the price of it can take a dramatic nosedive. I know that some stocks blow up from their reports, but you truly don't know which way it will go and how the market will react. You can still play off earnings. Many times there is an uptrend before the earnings due to people expecting the company to do well, so you can buy the hype and sell before the news occurs. The fourth rule I follow is not being too diverse in my portfolio. I used to buy 15 stocks that were all up trending. The problem was that my gains were small because not all of them did super well. If say I had 15 stocks and 13 of the 15 stocks only went up 2 to 4% and 3 were between 7 to 12%, my profits would not be as large if say I bought 5 or 4 stocks that went up only 2% and one went up 9%. If they were all equally distributed, the profits in the second example would be greater. This also helps you narrow down which stocks you believe have the most potential. I am guilty of breaking this rule because you see other stocks that are uptrending and you buy in and you miss because you feel you'll miss the opportunity, and this is another form of FOMO. And the fifth and final rule I follow is don't YOLO on a stock or cryptocurrency, meaning don't throw all your money at just one stock or crypto. I have also been burned by this and have lost a lot of money doing this. The old saying, don't put all your eggs in one basket, very much applies to stocks or cryptocurrency or any form of trading. It's also good to be somewhat diverse, and remember, just don't be too diverse. If you enjoyed this video, please like and subscribe. As always, thank you for watching, and I will see you next time. Thank you.